Who are the smart investors? And how can you become a smart investor? I was searching through Pepper2 contract address to see if people who got in early sold or are still holding. That is when I discovered this smart investor. You can scan a wallet using the bank, Xerion, or Arkham, and the address is this address, this one, which was created almost 3 months ago and was one of the early adopters of Pepper2. This person purchased $6.5K worth of Pepper2 on June 28th, the day the coin was launched, probably expecting to do as well as the original Pepper coin did, which was over 40,000%. Then, on June 29th, that $6,500 worth of Pepper2 increased to $90,000, and he sold everything and bought again the next day. But this time, he didn't go all in. Instead, he bought $76,000 worth of the coin, securing his original capital with some profit. He waited till July 7th for Pepper2 to do over 100x. Then he started selling little by little, and by July 10th, he sold everything and has made almost $900,000. It's either this guy is a smart meme trader or he has an insider information. He took the risk of purchasing a risky meme token, and the next day, seeing the appreciation, he sold everything, but is aware that there's a possibility that he sold too soon, so he kept an eye on it. That the next day, seeing how well the token is adapting, he took out his initial investment plus some extra profits and decided to go back in with the remaining money, knowing that whatever happens, he is no longer at risk of his original capital. Now, even if you say that he has an insider information, it is still important to learn how well the game was played. Not everyone will be that smart. I'll give you another example. There's another investor I came across that bought a particular GameFi token, held the token from $34,000 down to $6,000 and never sold. Now, let's look at 4 types of investors and how they play the game. Number 1 are the losers. They get too attached to a token. They expect the coin to keep going up in price, and even when the coin gets to that price, they move the price target higher and keep expecting it to keep going up. They never take profits. Their portfolio usually consists of 1 or 2 coins in total. They trust a coin as if they own the coin, even when the owners themselves are dumping the coin. Number 2 is the degen investors. They don't care about the fundamentals of a cryptocurrency. They gamble their money on new hot meme cryptos in the hope that it will appreciate quickly so they can cash out and move on to the next one. The swing investors come in at number 3. They conduct research, have price targets and stop loss levels. They buy and sell and rebuy depending on the condition. Unlike the losers, these investors do not stake their entire portfolio on a single coin, and they know how to move fast when the trade goes against them. This brings us to those who bring millions of dollars into a coin. They are the professional investors. They are the VCs and the angel investors. They usually have a research team that does extensive research before buying into a coin. In many cases, they are the first to buy that particular coin. They hold the coin for a long time, providing support most times to the project team. They can hold for years. And now, if you're familiar with the crypto news, you will know that there was a dormant ETH address for 8 years. This person bought 2,000 ETH for $620 and recently sold them for $3.6 million after 8 years. Now, one thing that is for sure is that all these type of investors want to actually make profits. The pro investor knows the type of coin to buy. He's already well to do and doesn't have the time to keep up with all the activities happening in the crypto space. But he wants to maximize his portfolio without taking unnecessary risk. So he studies what to buy before buying and doesn't place all his investments under one asset, even though he believes in what he bought. He still knows that uncertainties can make some investments not go as planned. The degen knows that he is not that wealthy, so he tries to buy the trend and cash out immediately before it begins to fade. He is aware that he is already buying into risk, so he does not go in with all his entire portfolio and cashes out in few days, whether it's in profit or not. The swing investors buy the rumor and sell the news or the hype. This investor is not really interested in long term, but that doesn't mean that he doesn't study the type of coin he wants to buy at that time and sells immediately when people start to FOMO into the coin. To be this type of investor, you must be very attentive to information in order not to miss any information that comes across you. The loser is a type of investor we don't want to be, but sometimes end up being. They become so hooked to a coin, even when they don't have much to sustain them, and doesn't know when a trade is against them. This is more like when you're trading futures without stop losses. In many cases, regular study, experience, and a support group is what helps you to graduate from being this type of investor. You should know that you can be a degen, a swing investor, and a pro investor, but you should always know which type you want to be for whatever trade you want to participate in. If you lose focus, your portfolio will undoubtedly suffer. The perpetual smart investor I described earlier, after cashing out on his initial profit, he went back in, but on the safer side, he kept the first 20k profit for himself in case something went wrong. Some person hold a coin and it has lost 50% already, and they are still holding that coin hoping that it will rise. Guys, understand that it's not all coin that will survive the crypto market. Don't get too attached to a particular crypto as if you are the owner and have plan for it. Recognize that you don't have control over it, so you should let it go. The simple way smart investors maximize their portfolio is knowing the type of investors they want to become for each coin they are about to buy, and knowing the right time to exit a trade regardless of the situation they find themselves in, profit or not. They are not greedy. Knowing the crypto market is centralized, they never get attached to any one coin, and know that they can't place all their bets in one asset. You have to be skilled, guys. Check out the description for my tutorials and more information, and I will see you in the next video.